7:30 GMT plus 8. It's your time for the Dang Oracle. Once again, apologies for yesterday live stream. I don't know what happened. There's still some technical issues on the stream. I don't know why. It just keeps lagging all the time and frames keeps dropping all the time. So I hope that things will be better today and that we won't have too many technical issues. Although I have to say that the video that was uploaded after the live stream was okay. So I guess that's the positive news about things. But anyways, so let's start with how we always start. How is everything going with the world today? So let's update a little bit our numbers and let's check it out. Ooh, so the USA almost has 600,000 cases right now. So that's a pretty high number. Spain 172,000, Italy 160,000, and then France 137,000, pretty similar like Germany. So those are quite a substantial amount of numbers. The good news is that the amount of recoveries has been going up as well. So for example, Spain has 172,000 confirmed cases, but they also have 64,000 people who recovered. So that's actually a very good number, right? So that's more than 1/3 of the people who get the virus are recovered already. So that's a very positive thing. So let's take a look at it in a stats form. Let's refresh this so we get the latest numbers. And yep, as you can see, worldwide, the line is starting to flatten. As you can see, it's been flat now since the last couple of days. We are close to 2 million confirmed cases, but as you can see, 453,000 people also recovered. Once again, that's a pretty good number, like pretty much 25, close to 28%, something like that, recovered. A little bit more than 5% died from the virus. So of course that's less positive, but overall we can see that most countries are now finally starting to show some flattening of the curve. So that's a very positive thing. I hope that we will get over this situation in a couple of months, where we see everything stopping and slowing down, and obviously that would be the best also for the economy that is now on a standstill, which is definitely not good. Although, like we have been seeing, stock market is actually rallying from the crash. I mean, a lot of people are saying like, wow, we get like for example, Bitcoin went from 3.8 back to like what is it now, 6.7K, something like that. It went to 7K. That's almost double, but it also dropped down from like 10K to 3.5K, which is like a 60% like a 60% drop. So yeah, the recovery is very, very substantial, of course. But the question is this going to be long-term something that is steadily going to be going up? And as you know, everything is about the macro long-term. So let's go back to our basics, and on the monthly chart, like I have to keep explaining, the monthly chart is actually showing the most important thing is the yellow line right here, and as long as we close candles below the yellow line, things are in a macro perspective not bullish, right? So you can say whatever you want, as long as we on the monthly basis are not crossing over the yellow exponential moving average 21, EMA 21, things are actually not looking very good. So for now, things of course haven't changed much, and let's go back to our weekly chart. And on our weekly chart, as you can see, right now the price is really below all pretty medium and low time moving averages, even below the EMA 100 right now, which is also once again a very substantial moving average. And you can see that in our last week candle close, we had a shooting star pattern. And like if you've seen my video from before, if you have a shooting star pattern, that usually means a typical top or a reversal of the pattern. And that also just so means that most likely in the next few weeks, we will have a downward trend instead of an upwards trend. So we already have, currently are building our first red candle here. Of course, the week is still long. We still have until till Sunday to see what candle it's going to be forming. But most likely, if this candle is going to be confirming a close that is lower than the previous candle, so if we close the weekly candle below 6,766, that will mean that this is our local top, and then for the next upcoming weeks, most likely we will have a downward pressure or a downward trend for the next 2-3 weeks or something like that, which is very interesting because, as you know, the halving is upcoming, and the halving is happening currently estimated on May 12th. So that's a very important date for the Bitcoin world. Of course, everybody is actually expecting that price is going to go up, and maybe by then it could be very, very likely that we have reached some local bottom and we make some bounce during that period, which is very, very, very possible. But for now, so for the next upcoming weeks, I don't think we will see a lot of good things happening, I'm afraid, for Bitcoin. So this is the weekly. What I was looking at yesterday on the chart was the two-day close. So this is the two-day close. As you can see, the previous one we closed once again below the yellow line, the EMA 21, which is a bad sign. And then I was looking if we were the next one, if we were going to be closing below the moving average 10. So below the moving average 10 is this one. And luckily enough, we closed above the moving average 10. But once again, if this candle is going to be closing below the moving average 10, that will mean that we will start our big descent downwards. And definitely for the next, like I said, for the next coming few weeks, I don't think there's much positive that we're going to say about Bitcoin. Of course, it's not going to go down all the way, like immediately and instantly. Well, it could, but most likely we will have small bounces along the way, like I also said. Let's go on to the daily chart. And the daily chart is pretty much what I have been expecting. Like I've told you guys yesterday, I expected the price to make most likely somewhere likely a very small bounce from where we were at that point of time. I told you between like 6.8 to 6.950, something like that. And you can see the price went up to like 6,925, something like that. So it was exactly still in this range where I was expecting. And as you can see, I have put this in a very pretty green box here. And the reason why is, of course, this is a very important box. If the price manages to close a few daily candles, a daily candle above this green box, so I would say I would target a previous high here at 6,930. So if we would get some candle closes above that price, 6,930, I would actually think that we will go back to our previous pivot line at around 7.1. Yeah, as you know, that was the previous very important support line. And 7.1, and if we can break that 7.1, we actually have our free road towards, once again, our 7.350 range. So for now, it's still a matter of like waiting out what is most likely going to happen. The most important key area is this green box right here. So I'm waiting for the price to either close tomorrow. If tomorrow the price closes below the EMA 21, once again, this yellow line here, which is currently at where we're at, 6,854. So if we close below 6,850, then most likely, then this top here is most likely our confirmed local top at this one at 7,473, and then we are making a lower high, right? So that's very, very important. So I'm just looking at the price for today. If it's going to be breaking down below and closing tomorrow morning, if it closes below the EMA 21. But as you can see, the price is very, very weak. And of course, I have also told you guys, the most likely what is going to happen is, even though we made that very, very small bounce, we will most likely end up here at around the 6.4K level before we make another bounce. So let's go a little bit on the lower time frame, which is the 4-hour time frame. As you can see, right now we are getting rejected by the EMA 55, or the orange line. And if this line between the yellow and the orange line, the gap widens. So if it widens open, there will be more strength towards the downside. So people will be, I mean, the price is going to accelerate and go down quicker once there's like more divergence between those moving averages. So that's what I'm looking at. As you can see, the gap is starting to becoming bigger and bigger, which means that if once this price here, if we get some closing candles below this very important 6.7K area, then yeah, I'm pretty confident that we will be going lower, and most likely towards this box, like I told you guys, at around 6.4K level. And then most likely we will have a small bounce there, but like I've also explained to you guys, I don't think that's the end, and we will see some more downward pressure along the way in the next upcoming few weeks. So let's talk a little bit about patterns. If we look at this pattern right here, we can see that this is once again forming some sort of a rising wedge, as you can see here, this pattern that we are forming right here. And the same pattern that I've told you, whenever the price is going up, but we see that the volume is going down, that is a very weak bounce. And once again, this is proven to be true, and we will most likely see a breakdown of this pattern once again. And let's make some trend line here. So let's say this is our channel that we are forming right now that is going up. So this is more or less a if you look at it, more or less a bear flag, right? So if we take a measure and move from here and make an estimate, let's say we break down somewhere, well, this is a little bit too big, let's make it here, from this one till here. So if we break down there from around here, as you can see, we will end up around our 6.4K level. So do I expect that we immediately break down today? Today is probably not the right day just yet, and we will go into probabilities a little bit later on. But yeah, that's basically, if not today, somewhere tomorrow or the next day. I can't really put a date on it. Like I said, it can still go a little bit back higher, retest like 6,950 once again, and then get rejected again. Maybe it will even wick up all the way to 7.1K. Like I said, if we manage to break and close some candles above this level here, we have our free road towards first 7.1, and if we close candles above 7.1, 7.3. So it's not sure that we will immediately break down from here. We will only immediately break down from here if we start closing below the EMA 21 on a daily basis, and that's something we will only, of course, know by tomorrow. So let's go back on our macro perspective. So this is our weekly chart, and a lot of people will be thinking like, well, you know, trading every day is not really something for me, right? So I want to be an investor. I want to trade maybe once a while. And so what would be the strategy that I would be advising for those kind of people? Well, it's actually quite simple. So what you do is actually just use two moving averages. So I'll put the moving averages in here. So moving average. So I'll put 2. And the first moving average will be the moving average 10. And the second moving average will be the moving average 20. Oopsie. 20. Okay. That's it. Those are the only two moving averages that you will be needing. Then we'll put this on the monthly. And the strategy, well, the strategy is very simple, and I'll put the moving average on the Bitstamp, because then you have more data instead of XBT. Okay, so the strategy is very, very simple. Whenever we have a bearish cross, you will be selling. So when we have a bearish cross, then you will be selling. Whenever we have a bullish cross, like here, you will be buying. So you would have, with this strategy, you will never maximize everything. You will never have the top because this is the top, but you only sold here. But the good thing about this strategy is you only have to make a movement maybe 1 time or 2 times a year, and you will be profitable, right? So let's go on for that. This is the bullish. So you would be buying at 327, and you would have sold here at 6,500. Pretty good, I would say. Once again here, we have 6,000, 7,000 that you would have bought, and price went back up, as you can see, and now it's starting to limp back down already. So that's basically what I wanted to show you guys. And you can even if you want to trade a little bit more, you can do it on the weekly chart as well. So then you have, obviously you have more times that you have to buy and sell, but it's pretty much the same thing. If you want to buy, you wait for a bullish cross, and when you want to sell, you wait for a bearish cross. See, you would have, for example, you would have sold here already, which is at 11,000, which is not that bad. Then it stays down, and you would have bought here, which is at 3,800, and you would have sold here, which is at 9,800. You would have bought here at 8,300, and then you would have sold here, and then here, actually here you would have made a loss. It's like a small loss of like $500 or something like that. But as you can see, it's still a pretty valid, simple strategy where you only have to like make a trade like once or twice a year or something like that. So for just beginners who don't want to be looking at their computers on a daily basis like me, you can do that as well. Okay. So let's go to our topic of today. Our topic today is divergences. So divergences are very, very important because if you go on the daily chart, I'll remove those moving averages first. And I'll put back my other moving averages. Okay. What you want to see on a chart when we have a reversal pattern is that we find divergences at least on the daily chart. So let's go to our cheat sheet. This is our cheat sheet. So when do we have bullish divergence? And actually you have 6 types of divergences. So you have regular divergence, bullish or bearish. You have hidden divergence, hidden bullish divergence, or hidden bearish divergence, or you also have exaggerated divergences. So this is something that is not on this cheat sheet. But the thing is, it's not very well known and it's not very usable. It's in a very low percentage of use cases. That's one of the reasons that I'm not explaining it. But if you are interested in it, you can of course look it up. It's called exaggerated bullish divergence or exaggerated bearish divergence. So in the case of bullish regular divergence, that is when the price makes a lower low, but your indicator, for example, your RSI, is making a higher low. Okay, so let's go to our chart and just find a perfect example for that. Well, let's add the indicator. So let's add our RSI. There, boom. Okay, and then will remove this one once again so there's not too many lines. So what you want to see is, as you've seen the theory, so we want the price to make a lower low here between that point and that point, but the RSI making a higher low, so from this point to this point. So as you can see, the price made a lower low, so price went down, as you can see, but the indicator, the RSI, made a higher low, so went up. So that's regular bullish divergence. And the thing is, do we see, and that's why my point is, do we see in this reversal here any type of divergences, right? So we have bullish divergences, regular bullish divergence, and we have hidden bullish divergence. So hidden bullish divergence is when the price is making higher lows, but the indicator is making lower lows. Okay, so let's go to our chart and try to find an example of that. So price is making a higher low. Okay, price is making a higher low, but so for example, from this point here to maybe this point here, price is making a higher low, but the indicator is making a lower low, as you can see here. So price is making a higher low and the indicator making a lower low. So here, boom. So let's make an arrow. So price is making a higher low and the indicator is making a lower low. So that's hidden bullish divergence. And usually what happens is during that period we get an uptrend afterwards, and that's what worked out, right? See, you can see here we have a price that went up. Also here, this is regular divergence, lower low but a higher low, and price went up. So usually what happens is when we have regular bullish divergence, we have a stronger impact than hidden, but you can't really always say that that's the case, but most of the times that's the case. So the opposite, let's go for the opposite. When we have regular bearish divergence. Regular bearish divergence is when the price is making a higher high, but your indicator is making a lower high. So when price is making a higher high, but the indicator making a lower high. So let's see if we can find some examples here. Here, higher high, lower high. Nope, no bearish divergence there. So let's see here, price is making higher high. Nope, no regular bearish divergence here. Making a higher high. Higher high. Okay, here we have a little bit here. So the price is making from here to this point a higher high, and the RSI is making a lower high, as you can see here. So higher high, lower high. So that's regular bearish divergence, and as you can see, price afterwards went down afterwards after that bearish divergence. And then we have the hidden bearish divergence is when the price is making lower highs, but the indicator is making a higher high. Okay, so the price is making a lower high, let's see, but the indicator is making a higher low. 1 second. Higher high, sorry. Lower high. Let's see if we find here lower high, higher. Yeah, here this is an example. So price is making a lower high here, but the indicator making a higher high here. So lower high, higher high. Okay, there. So we have hidden bearish divergence here, and price went back down. So now you know what the differences is, or how you can spot regular and hidden bearish or bullish divergence. So back to what I wanted to tell you guys is, let's remove all of this first. So if you look at whenever we were in the past, right? In the past, this was here, as you can see, a U-shaped reversal pattern, a correction reversal. So I've already told you guys, a U shape is when a price goes down, stays very long time, and then goes back up, back to the previous. If you watched my, I don't know, my previous video, you can see the 4 types of corrections in the market. It's a very interesting video if you want to see what types of corrections we have. But what I wanted to say in this video is every time when we had a reversal of a pattern on the daily, we always have 1, 2, 3. So we can see here stabs of bullish, regular bullish divergence before we went up. And as you can, if you can see here, the price made a lower low, but the RSI made a lower high, a higher low. Oopsie, here, as you can see here. So, and that has happened every single time we had a breakdown. So if you look at this one here, when we broke down here, we have here, this point to this, we had a lower low. And then this point here to this point, we have a lower low. But then we have a RSI bullish that gives us a bullish regular divergence. So every time we, even in like small local bearish dumps, as you can see here, poof, poof, we were always making higher lows on the RSI after, and that was then considered a reversal of the pattern. And that's basically one of the reasons why I don't think this can be a V-shape correction or a V-shape recovery, because once again, price is we made a lower here, but there's no bullish divergence. Like I said, normally we get 2-3 stabs at a lower low before we get a reversal of our pattern. So for me, that's one of the reasons why I wanted to explain a little bit the differences between divergences, because it's very important to understand that most likely this pattern is not going to be a V-shaped correction. And until I see bullish, regular bullish divergences on the daily charts, then only then I will be considering that we will have a reversal. That, I think that makes total sense, right? So that's one of the reasons that this most likely is going to be either a W correction, which has a lot of chance, of course, like I've explained before. If we get a double bottom pattern and we go back down here and then we go back up, it makes all the sense in the world, because then when we go back down here and form our next stab at the bottom, we can form bullish divergence, right? So if we don't create any lows, then we cannot also create any divergences on our RSI. So I hope that makes it clear, and that's one of the reasons why, of course, aside from all the other things that I've told you guys, bearish cross on the 2-day chart, EMA bearish crosses, hash ribbons, VWAP ratios, monthly chart, EMA below the 21. I can give you the whole watch list once again. If you check all my videos, you will see that there's, in a macro perspective, just way more negative things than positive things. And that's one of the reasons why I'm, in a macro perspective, more likely inclined that it's going to go down more than that it's going to go up. I'm not saying that this cannot be our bottom. So 3.8K, it's possible that we don't break that 3.8K anymore. But what I do think is we will most likely, take a stab in that area once again before we actually recover. And to be honest, I mean, it can easily be like 3.5 or something like that, before we make a recovery. But for now, that's not really important. As a trader, like I said, we should be enjoying the frequency that the volatility of this asset. Okay, so boom boom. Let's go to our S&P chart. Well, our S&P chart is very, very, very interesting. As you can see here, our HVP is right now at 1. on the 4-hour chart, which is something that means that some move is going to happen, most likely today, tomorrow, something like that. And we don't know. The HVP only tells you that there is most likely a big move coming, but it doesn't tell you the direction. So what I'm looking at is, where's the price currently at? The price is currently at it is above the EMA 21 and above all moving averages. So there's quite a good chance that actually the S&P takes a leg up higher. And why is this important? If the S&P takes a leg up higher, since the correlation with Bitcoin is very big, most likely Bitcoin is going to take a leg up higher as well. Then, if you look at the 10-hour chart on the S&P, we can also see that once again, HVP is flashing at 2 right now. So that's on the 10-hour chart. That's a quite a big substantial signal, because usually if it's on a very high time frame, we're talking about very, very large moves that is upcoming. And what we can see here is a very toppy formation. Actually, you can see stocks are starting to crawl back down. RSI is starting to get more tired here at the top. We are at the bullish zone, but it can get rejected at any time and space here. So, and we have this rising wedge. So everything that it's telling me is most likely we'll get another leg up on S&P, but we have to be very, very, very careful, and most likely it's going to be dropping back down very, very, very soon. But that does give us some confliction right now with our Bitcoin chart, right? As you can see, price is already starting to drop. So if S&P after today makes a huge step down, if it breaks back down, for sure Bitcoin is going to take a big leg down as well, right? Okay. Hi, Dilufi Monkey. Welcome to the channel. So what we're looking at is this, and to be honest, if we're looking at the volume signature, you can see that the volume has been contracting all the time. And if we're looking at the HVP on Bitcoin, we can also see that it has been contracting all the time. And as you can see, like I said, it has been maturing. And once it starts going below the 10 on the Bitcoin chart, this is going to be a very volatile move. And if we take a look, I think somewhere it's more something like this. Yeah, somewhere this week actually it will be reaching maturity. So I think this week we will have most likely some gigantic move of like $1,000 or something like that. So yeah, I would not be surprised if Bitcoin either reaches our green box here at 7.8k, or it can reach our red box here at 5.8k. So basically that's the move that Bitcoin is most likely going to be taking this week. 7.8 or 5.8k. Obviously, like I keep explaining, the downward trend is more probable and more likely, but you never know, because if we are looking right now at the S&P chart on a shorter time frame, it still has some space to go up, right? So yeah, it's going to be very interesting this week. But of course, we can deduct already a lot of things by just going down from box to box, right? So to trade this it's very simple and clear. If we get some candle closes below tomorrow, below this EMA 21 and below this very important 6,700 line, then we will get that break to 6.4, make a dead cat move, and most likely go down more after. That's basically my main scenario right now. But if we get some candle closes above this one, this green box here, we can easily take a swipe upwards and see if we can liquidate some shorts over there. So let's do some Fibonacci retracements. If we take a Fibonacci retracement from this point here to this point here, we can see that the most critical zones are this one, of course, 6,800 at a 0.38, and 6,610 at the 0.5 FIB level, and our golden pocket ratio at 6.4K. So that Fibonacci retracement level makes all the total sense in the world, because that's where all the key points or the key prices are at. So let's make a bearish retracement here from this top to this bottom to see what zones are key. And as you can see, we are hovering right now at the retracement level of 0.382 FIB level at 6,800-ish where we're at right now. So we already made that retracement to the 0.382 level. It's possible that we go back a little bit higher, right? So 7K is the 0.5 FIB level, or 7.1K is the golden pocket ratio. So I would not be surprised if we take another swipe first to 7.1 before we break down. So that's very, very possible. But everything really depends on what happens tomorrow, if we are closing some candles, like I said, below the EMA 21, yes or no. So let's look at some probabilities. So right now, if we look at the standard deviation, the top standard deviation is right now at 6,980, and the bottom standard deviation is at 6,675. So what does that tell me? And with the slope going a little bit down, it means that the probability that we are going down and close the candle tomorrow below 6.7K is a little bit higher than going up. And even if we go up, the probabilities that we are closing above 7K is actually not that big as well. So for me, the big areas is, like I said, closing a candle at 6,950, which is still in the first standard deviation top, or closing a candle below 6.7, which is the bottom standard deviation of the expected move chart. So those two key areas make total sense, as you can see, even when we're just using mathematics and standard deviations. So once again, we will have to be a little bit patient and see what is going on tomorrow. But one thing that we can also see is right now the RSI is currently trending down and getting rejected below the EMA. So as long as we are going down and we're not pushing up and crossing that line of the EMA, then most likely we will be just trending more downwards, but on a slow pace until, of course, we break some key areas. Looking at the 4-hour, we can see that right now the last 4-hour close was not very good, and we are actually breaking down below the EMA once again. So if we break this EMA, and we most likely will get a bounce here, and if we get that bounce here, that's when I'm thinking, yeah, most likely 6.4K or something like that before we get another bounce there. So right now, of course, my main scenario is still the same. I think we will be going by tomorrow or the day after, something like that, to this zone here at 6.4K, which is something that I already have told you guys since yesterday. I was just, this is just a matter of time. I feel then eventually we will get there, even if we get a swipe up to a 7.1 or something like that. But this whole structure is looking more and more bearish to me, and if the next 4-hour confirms that, then it's most likely over then. Okay, let's see. Okay, we had I'm just looking at the last 12-hour candle close. It's like a doji candle, so it doesn't tell us that much. It doesn't give us that much information. Stocks on the 12-hour are still okay, are still trying to cross up, but the next 12-hour candle close, if it closes below the 6,800, then it's definitely over. Looking at the daily stock average charts, yep, it's still crawling down, and yeah, we have a very, as you can see, we have a very long distance down, so that's definitely not good. And then we look at the weekly. Weekly is actually trying to make a little bit like a little bounce up, but the question is how long. Yep, let's go back to our 12-hour. Yeah, so yeah, I don't know why it's stopping here. Okay, so yeah, if we see some tomorrow, if we see some candle closes below this yellow line, which is more and more, I'm more and more inclined to see that happening. And definitely now that we are seeing that the 4-hour RSI is starting to close below the EMA. But how long is it? Yeah, we still have 3 hours and 48 minutes before the candle close, so it's still some time to go. So I think we will know a lot more by then what is going on, but I still stick to my main scenario, which is most likely 6.4k. What one did I want to? Oh yeah, let's go take a look at what's going on with the Chinese traders. Trading data. Okay, so shorts are actually decreasing. That's interesting. Decreasing in the total accounts, and longs. Let's see here. Yeah, longs are actually still more in more longs than shorts. So yeah, maybe this can be just a nice fake out from the traders, and then they will push the price up to like 7.1 to get everybody out, and then dump it down to 6.4k. So that's definitely a scenario, or like 7k and then dump it immediately down to like 6.4k. Overall, that's micro movements, so I don't really care that much about that. Like I said, I still think that this week we will have a very big move, most likely around $1,000. The movement is most likely going to be either 7.8k or 5.8k. So that's where my thoughts and are at, and we're trying to figure out a nice entry position where we can either short it or long it. But for now, my theory is still the same. 6.4k most likely tomorrow or the day after or something like that. Okay, so yeah, I think that's all clear, and I hope you guys learned something also today about divergences. And yeah, I just wanted to end this by saying stay home, stay safe, and stay COVID free.